You open your eyes and something feels off, but you can't say what. Your phone is right there on the nightstand, lighting up with notifications. You swipe them away and open your banking app like you do every morning, almost on autopilot. Only this time the login wheel spins, stalls, and spits out a message you've never seen before. Account access temporarily unavailable. Please try again later. Mild irritation. Whatever. Apps break, servers go down. You try again. Same result. Now you're a little annoyed. You were planning to pay a bill today. You were going to transfer money. You wanted to check how much you had left after rent. But you shrug it off because in your mind, this is a tech problem, not a money problem. You get dressed, grab your keys, head out. The neighborhood still looks normal. People walking dogs, delivery vans in driveways. Nothing feels like a crisis yet. You stop for gas on the way to work. You fill the tank. You go to pay. You tap your card. Declined. You try again. Declined. You hand the cashier the same card you've used for years. He tells you, system's down, cash only. That's when you feel the first little pulse of unease. You check your wallet, 7 crumpled dollars. You drive to the nearest ATM because, obviously, you'll just pull cash and move on. Only the ATM screen is black. There's a sheet of printer paper taped over it with a piece of packing tape. Out of service. You go to the ATM across the street. Same story. A third one at a pharmacy. Same story, this time with a handwritten note. No cash. Now the unease is no longer a pulse. It's a weight. You open your banking app again, standing on the sidewalk, still locked out. You text a friend, your card working. The reply comes fast. No, bank says maintenance. Another message follows, seconds later. Do you think this is bad? You tell yourself it's fine. You tell yourself that big systems don't just fail. You tell yourself somebody somewhere is fixing this right now. Then you start looking around. The parking lot of the local bank branch is full, but the doors are shut. People are standing outside, not at the ATMs, at the entrance. You notice their faces. They do not look like people casually running errands. They look like people who were supposed to get money today and did not. 2 of them are arguing with each other. One of them is on the phone, voice raised, saying, "What do you mean payroll bounced? How am I supposed to pay them? What am I supposed to tell them?" On the small TV above the counter at the grocery store, a news anchor is speaking in that calm, almost rehearsed voice used for no reason to panic messages. You hear words like temporary review, systemic stress, protective measures. You hear government regulators are coordinating with major institutions to ensure an orderly process. You do not hear, don't worry, your money is available. Your brain does a very fast calculation. Mortgage or rent, groceries, fuel, electric bill, kids' needs, debts. You replay the phrase cash only in your head and realize you do not actually know how long you could function if all you had was the paper money already in your pocket. That's when a very cold sentence surfaces in your mind. My money might not actually be mine. Up until this exact moment, you've probably lived with a quiet assumption. You assume the number you see in your banking app is something physically sitting there, waiting for you. You assume if it says you have a balance, that balance is available. You assume access is guaranteed. But that's not how the modern system works at all. What you see on your screen is not a pile of cash with your name on it. It's an entry in a ledger owned and controlled by somebody else. It is permission, wrapped in code. And permission can be revoked. This scenario, by the way, is not science fiction. It's not the plot to a disaster movie. Versions of it have already played out in multiple countries that considered themselves advanced, civilized, educated, and safe. Regular people woke up thinking life was normal, and by the end of that same week, they were standing in line outside locked bank doors, begging to access their own savings, begging just to get enough cash to buy food. In one country, after years of fiscal strain and political arrogance, the government imposed strict withdrawal limits. You could not take out what you wanted. You could only take out what they allowed. If you needed to pay rent, too bad. If you ran a small shop and needed cash for inventory, too bad. If you had a medical emergency, too bad. The word used by leaders was stabilization. The word used by citizens was theft. In another case, a European country with modern infrastructure and membership in respected international institutions froze accounts during a crisis. and then use depositors' money to repair broken banks. Not investors' money, not executives' money, not politicians' money, depositors' money. Normal working people woke up to discover that a portion of what they had saved for retirement, for education, for the future, had been legally taken to prop up the very institutions that had put the system in danger in the first place. In yet another country, where the financial system had been rotting quietly for years, while officials pretended everything was fine, banks suddenly announced temporary controls. That phrase sounds harmless, even professional. What it meant in practice was brutal. You could only withdraw a very small slice of your own savings, and even that slice was sometimes delayed or denied. People didn't show up at branches with paperwork anymore. Some of them showed up with weapons. They weren't trying to get rich. They were trying to pay for surgery, or pay for school, or keep a business alive. And if you're thinking, okay, but that's somewhere else, and my country is more stable than that, I want you to hear this part clearly. Even in supposedly rock-solid economies, even in places that like to say that can't happen here, there have been moments where the entire banking system had to be slammed shut in order to stop a complete collapse. Not one bank, not a couple of banks, the whole system. Now, pause and sit with what that means for daily life. Because we tend to treat finance like it's abstract. Charts, headlines, interest rates, boring jargon. But when banks stop moving money, normal life stops moving with them. Payroll doesn't clear, which means your paycheck doesn't show up. Your landlord or lender still wants to get paid, but transfers aren't working, so now they want physical cash, which you can't access. Shops stay open for a bit, but only for people with bills in their hands. Card only flips to cash only. And if you don't have cash, you're not a customer anymore. You're a problem. Suppliers don't get paid, so deliveries slow down. Essential goods don't arrive on shelves. You start seeing empty spaces where the basics are supposed to be. You hear phrases like, limit one per customer, in places that never used to say that. Parents start hoarding formula. Drivers start hoarding fuel. Neighbors start hoarding canned food. The mood shifts from, this is annoying, to, this might get ugly. Small businesses hit a wall almost immediately. A restaurant can't pay staff because payroll is frozen. A construction company can't pay for materials because the bank won't wire funds. A pharmacy can't restock because suppliers want guaranteed payment, not promises. After a couple of days, owners aren't thinking about profit anymore. They're thinking about survival. Hospitals, schools, logistics, repairs, deliveries. All of it depends on money flowing at the exact moment it's needed. When that flow stops, time itself becomes a weapon. A delay of 24 hours might be frustrating. A delay of 10 days can destroy you. Here's the core truth most people are never explicitly taught. Banks are not safes. They are machines that transform deposits into loans. They run on a model called fractional reserve banking. Put simply, they do not keep all of your money in their vaults. They keep a fraction of it, then they push the rest back into the economy as credit. Mortgages, business loans, government debt purchases, financial instruments you've never heard of. From the bank's perspective, your deposit is not sacred. It's fuel. From your perspective, your deposit feels like a claim you can exercise anytime you want. Those two views can coexist under normal conditions. But the moment a large number of depositors all try to exercise that claim at once, the math stops working. The bank does not have the liquid cash to satisfy everyone. Not because it is evil, but because the system is literally designed that way. That moment is called a bank run. Popular culture treats bank runs like hysterical mobs pounding on locked doors. But in reality, bank runs begin quietly, even politely. A few people move their money just in case. Others see that and follow. Word spreads, fear compounds, withdrawals accelerate. The bank's thin cushion of available cash starts evaporating, and once that cushion looks thin, everyone races to be first in line, because in a run there are only two positions that matter, early or too late. When a bank run begins to accelerate, officials have a choice. Either let the institution fail in real time, or freeze access. Over and over, historically, they choose the freeze. They call it a pause. They describe it as responsible. They say it's temporary. They say it's for stability. But from your point of view, it translates to, you can't touch your own money. Why do they do this? Because governments and banks are not two separate worlds. They are partners. Banks fund governments. Governments protect banks. Banks absorb government debt and keep spending possible. Governments write rules that allow banks to operate with thin reserves, confidence-based credit creation, and leverage. When trouble hits, that partnership closes in on itself and treats the public as a threat to be managed. This is where the messaging becomes almost theatrical. You'll hear talk of protecting depositors, even while depositors are being blocked from withdrawing. You'll hear references to maintaining order, which usually means preventing people from accessing cash until officials decide the panic has cooled. You'll hear leaders say, "Your money is safe," which, if you translate it honestly, means your money technically still exists in accounting terms, but we're deciding how and when you're allowed to use it. Sound harsh? Look at how protections are structured. Deposit insurance, for example, is often presented as an iron shield. You're told that up to a certain amount, you are guaranteed. Don't worry, you're covered. Relax. But that safety net works mostly as psychology. It's not sitting there fully funded, waiting to pay out every single insured account instantly at full value if everyone shows up at once. The real function of deposit insurance is to prevent mass panic by convincing most people not to run in the first place. In calm times, that story holds. In system-wide stress, that story is tested. And if fear outruns reassurance, we are right back in line at the locked branch. Now, bring it back to you, right now. Imagine this does not resolve in a few hours. Imagine it drags into days, then weeks. Imagine paychecks are delayed until systems normalize. Imagine your landlord or lender saying, "If you can't produce cash, you're in violation." Imagine your card being declined at the grocery store in front of a line of strangers. Imagine trying to buy critical medicine and being told, "We can't process that right now, sorry." Imagine being technically not broke on paper. You might have thousands in the bank and yet functionally powerless because that money has become untouchable to you. That's the real horror of a banking freeze. It's not just losing savings to inflation or devaluation, even though that happens. It's being locked out of your own life while being told to stay calm for the greater good. People call this a financial crisis. That phrase sounds sterile. What it actually is a trust crisis. The modern banking system runs on belief. Belief that money in your account is available. Belief that transfers will clear. Belief that pay will arrive on time. Belief that credit cards will swipe. Belief that you can trade your labor today for access to goods tomorrow. The moment that belief cracks, the machine begins to seize. Once that seizure begins, it spreads almost instantly from the abstract economy to the physical world. Supermarkets, pharmacies, gas stations, deliveries, payroll, rent, medical care, education, travel. Every part of modern daily life runs through the same tunnel. Shut the tunnel, and society doesn't slow gently, it convulses. That convulsion leaves scars. In places that have lived through forced withdrawal limits and emergency bank closures, entire generations lost faith in institutions. People who spent decades playing by the rules, saving, budgeting, paying taxes, doing everything right, discovered that when stress hit, the system did not protect them. The system protected itself and expected them to absorb the blow quietly. That sense of betrayal matters, because once people feel that, they don't fully come back. Some start hiding cash, some move assets abroad, some diversify into things that cannot be frozen with a keystroke. Some stop trusting any official reassurance at face value ever again. Some turn angry and desperate. And desperate people do desperate things, which is why, in severe cases, what begins as a banking crisis can morph into street violence, political chaos, or social breakdown. This is why pretending it can't happen here is the most dangerous mindset you can possibly have. So, let's talk about what a rational person can actually do. Not in a panic, not in paranoia, but in realism. Step 1. Understand access risk. There is a huge difference between I theoretically own X amount of money and I can actually use resources in an emergency. Wealth that is trapped inside a frozen system is not wealth you control. Part of being financially resilient is making sure that if everything locked up tomorrow morning, you would still be able to function for a period of time without begging the same system that just shut you out. That might mean keeping a reasonable emergency cash buffer you can physically reach. It might mean not concentrating every dollar in a single bank or a single country. It might mean holding at least some assets that are not purely digital promises. Skills, tools, inventory, durable goods, property, metals, anything that has value independent of a bank's approved, denied stamp. Step 2. Learn to translate official language. When you hear phrases like temporary holiday, capital controls, liquidity event, orderly resolution, or stability mechanism, don't just nod. Run them through the real-world filter. Ask, does this phrase mean I will have less access to my own money? If the answer is yes, you are not being protected. You are being managed. Step 3. Stop pretending banks are neutral utilities. We're encouraged to see banks like electricity companies or water lines, boring services that quietly keep life running in the background. But banks are not utilities. They are power structures. They choose which transactions go through, under what terms, and at what moment. They decide who gets credit and who gets flagged. They coordinate with governments in moments of stress, and when they do, their priority is system survival, not your comfort. Step 4. Remember that none of this is about doom. It's about leverage. The less dependent you are on a single point of failure, the less leverage the system has over you in a crisis. That doesn't mean hiding in a bunker. It means refusing to be the person who discovers, too late, that every form of value you control lives inside somebody else's lockbox. Because here's the brutal little secret most people only learn the hard way. Money is not just about how much you have. It's about whether you are allowed to use it when you need it. Everything you've heard in this story leads to one final question. And it's not theoretical. It's practical. If you woke up tomorrow, opened your phone, and saw that access had already been cut, cards dead, app frozen, transfers blocked, ATMs empty, how long could you keep your life intact without pleading for permission from the very institutions that just sealed the doors? If that question makes you uncomfortable, good. Sit with it. Think about it. Act on it calmly, not frantically. Because the real danger isn't the day the banks shut down. The real danger is realizing in that moment that you never actually had control in the first place. If this opened your eyes, subscribe and stay with us. This isn't about fear. This is about understanding how the game is really played and how not to be the last one to figure it out.